Hi everyone, welcome back to Voice of Super, ASFA's podcast by the super sector, for the super sector. I'm so delighted to bring you a very special guest today because we're recording this episode a week after the Treasurer's Investor Roundtable and just ahead of the Treasurer's Productivity Roundtable or Economic Reform Roundtable, which will run from the 19th to the 21st of August. And ASFA will be representing the super sector on the 19th. But both of those events have sharpened the national focus on how Australia can boost productivity and really ensure that investment is flowing into sectors that will drive long-term economic reform. So our guest today is the very delightful Jason Collins, who leads BlackRock's business in Australasia. BlackRock invests around $280 billion in Australia. I always have to check that I've said that right. That's an enormous number. Most of that capital comes from overseas, and so you bring quite a global perspective on what it will take to attract more of that investment here, and I think we can explore that today, and how super can be part of the solution to the productivity question in Australia. Jason, it's very good to see you.
Thanks for having me.
So I've got pages and pages of notes that we're going to attempt to get through in some extraordinary amount of short time. But let's start with what we all want to hear about. Your founder, Larry Fink, is on record as being a huge fan of Australia's superannuation system. And so can you tell us about the dialogue that you two have about super and how that shapes out in BlackRock?
Yeah, Larry's pretty outspoken on the issue of retirement globally. More than 50% of the assets we manage on behalf of our clients is retirement money. He writes to CEOs and chairmen every year. And a few years back, he highlighted the Australian retirement system in one of those letters. He said that Australia is the 54th most populous nation in the world. And it has the 4th largest savings pool. Actually, we're the 13th largest economy in the world as well. So we bat above our weight from a population point of view. Clearly, the super system is the output of some fantastic policy decisions over the past few decades. And he uses it as an example of what can be achieved in retirement. Globally, now 1 in 11 people are over 65, but by 2050, 1 in 6 people will be over 65. So this is a global issue that he's facing into, and he thinks Australia is a guiding light.
That's it. It's good news to hear, but it's quite a challenge too, isn't it? And then, so you've been in funds management for a while. We were talking before we turned the mics on about earlier stages of your career, but in that funds management space, tell us about how the relationship between the fund manager and those providers of retirement services, or more the super funds, but the pension funds, how's that looking at the moment? What are your observations?
Yeah, I joined BlackRock 12 years ago, just over 12 years ago. And at that time, I think there were nearly 400 APRA regulated funds.
Yeah, wow.
And today, I think it's under 100. You look at the top 10 funds. If you strip out self-managed super, the top 10 funds are probably 50% of the assets. There's 2 funds that are actually getting more than 50% of the net industry flows at the moment. So the dynamics have changed enormously. The level of insourcing has increased a lot. So super funds have become asset managers, and I think it's anywhere between 30 to 70% for some of the larger funds in terms of the amount of asset management they're doing in-house. So the relationship certainly changed. I think the work that went on following the Productivity Commission, the benchmarking process, was directionally 100% correct. And the notion of super, as we all know, and I'm speaking as an Australian now, not as a BlackRock employee, but as an Australian, is to ensure that the government's balance sheet is in a good state, and super is an insulation point. So the process of consolidation, the process of internalisation has been very important. It has changed the way that asset managers interact with super funds. For us, I think we're in a bit of a unique situation because we have an end-to-end offering. We call ourselves a platform as a service. So we do work across all asset classes. We're a technology business. We're a data business. And I think when I started, most of my job was selling BlackRock to Australian super funds.
Yeah.
But today, a lot of the job, not all of it, but a lot of the job is selling Australia to BlackRock. And we as you said before, we invest about $280 billion into Australia's capital markets, public and private, on behalf of our global investors. 80% of that's, as you said, sourced from offshore. And so what's happening now is we are certainly partnering with super funds, trying to crowdsource really funding for critical projects In the past, I think we were more of a supplier, but today certainly we are seen as a peer organisation and as a partner. And I think that's a positive if you look at the national priorities at the moment.
Yeah, I think that would be right from my observation as well. I was inside a fund when the dynamics started to change and there was more internal capability being built, and you could see how the more advanced and the more strategic consultants and asset managers and fund managers were able to really pivot and provide services that was still really needed by Australian funds.
Yeah.
So
I think as they set up internalisation functions, internal asset management functions, trading desks as well, there's a need to upgrade technology.
Yeah.
There's a need for better data. There's a need to trade instruments to make sure your asset allocation's working, you're managing your cash flows. And, for us, it's actually, we've been able to work in that environment. We have a technology platform that a lot of the super funds are using at the moment to manage their asset management teams. So, yeah, it's changed enormously over the past 13 years, but actually the last 5 years, the level of acceleration has been extraordinary.
Yeah, I think that's probably right. The internal load too that's carried by those investment ops teams, like the data, goes a little bit unnoticed, I think, from outside the sector, doesn't it? But you'll be able to see when you're dealing with funds that you've kind of got those two distinct client bases as well, and the internal uplift, the capability build that's gone into investment teams, people are kind of aware about. The capability build that's gone into investment ops has been equally exponential.
Enormous.
Yeah.
Enormous. Yeah, some of these projects where you're bringing on board a technology provider, they can be year-long processes.
So let's talk about productivity, because that's, if you don't say that word a few times in a podcast, it might be just cancelled. So it's everyone's got to talk about it. From your perspective, you're bringing in international capital, you're dealing with the capital pools in Australia as well. Which sectors in Australia most need that investment to unlock productivity?
Yeah, so I think without a doubt, I'd say infrastructure. And the quantum of capital needed for national priorities, it could be AI, it could be the transition to net zero.
Yeah.
It could be regionalisation. The quantum of capital actually breaks traditional finance models because the demand for capital far exceeds the traditional sources of capital as we know them.
Yeah.
And the traditional sources are, of course, government.
Yeah.
And banks. And if you look at government debt to GDP around the world, it's around 90%. Now, Australia is actually quite good. I think it's around 40%.
Yeah.
But you've got ageing populations. You've got in Australia a tax base or a revenue base really reliant on personal income tax. And so if you fast forward, and I think there's a forecast for deficits for the next 5 years, so that debt to GDP level will probably increase at a time when capital is really needed to build out the capabilities that are required in a changing world. So infrastructure is a key component part of that, and policy settings around infrastructure really matter.
I've been having a really inarticulate conversation because I just can't find the words for it, but I think you may have, where it's just because there's no model that exists, about how we seem to be having that infrastructure conversation, or the need for funding at too low a level given the pools of capital that we have available. So we have good and really lively conversations, in my opinion, about startups and about how to fund, early stage and where climate tech could be and everything. We have good investors, and probably international ones, but I'd love your opinion on that, competing for well-established assets. And then we seem to have a missing conversation about how we take on and find the product for really big, lumpy infrastructure projects in what might be, let's say, the energy transition. So I don't know, am I right in that theory? Like, I feel like we need to come at it from the top. We've got investors that are ready to, the capital there, ready for good, lumpy investment opportunities. But the
I mean, there is pools of capital around the world, whether it be sovereign funds, retirement schemes, in Australia, massive retirement schemes. There are pools of capital that are certainly looking for opportunities in infrastructure. And it comes down to a risk return scenario and the policy settings to enable that. I mean, I'm really sanguine about our ability as a nation to meet these needs. But I was reading the other day that a large data center can cost 40 to 50 billion US. That's just such an extraordinary amount of money.
It's enormous.
So you've got to crowd in capital
in
as many ways possible. And that can come from the super sector. It can come from offshore sovereigns, offshore pension schemes, and actually, retail investors around the world which don't have a lot of access to private markets as it stands.
The other opportunity in front of us is in a different vein, I suppose. We've got a lot of discussion about retirement. It's just every time someone says productivity, someone else says retirement. So let's talk about your partnership with Generation Life and what that means.
Yeah, we were watching policy for a long time. We saw the government's moves around making sure that there was an income solution for funds. Everyone knows the stats. 10% of the population hit 65 in the next decade, and we're very developed with decumulation solutions in the US, but we couldn't really crack the code here. The tax system's very complex. Super's complex. Social Security is complex. We knew we couldn't organically build that in Australia. So we're thinking about ways to best bring in some of our thought leadership into the local market. We looked around. Generation Development Group has a subsidiary, Generation Life. Generation Life is an issuer of annuities, investment bonds. We had a conviction in their strategy. We knew them because we were an asset management partner as well. And we just decided the best way to try and bring in some expertise in a really fluid area of policy right now was to form a partnership as opposed to developing something organically.
It's such an interesting, because it's been such a kind of, I don't know, underdeveloped market, but people have tried to crack this code before. I think all the parts are moving together a little bit better now. Do you reckon Australia's ready for something?
Yeah, I think I think it's a bit of a secret sauce of BlackRock as an organisation. We are very conscious of local environments, and we were never going to import something that wasn't fit for purpose. And I think there's been a few false starts, but it's had a really positive reception. There's work to do still. The idea, obviously, is we don't look across our shoulders at competitors. We're trying to grow the pie, right? And the government wants to do that as well. And it's important that retirement, when people accumulate all this money, they get to a retirement stage, that money can be spent with confidence. That's good for the economy.
Yes.
And with the wave of people moving into retirement age, that's going to be really important.
Yeah, it does feel like the right time too, because you've got people retiring with their super balances more meaningful than they have been before because of their lifetime of accumulation. So hopefully that's the other setting that was missing from this to really build a proper marketplace here as well.
Yeah.
And then we need, I guess, some sort of cultural understanding of what it means to have an annuity-based product in your mix.
Yes.
Because it's not a conversation we've had in Australia.
It's complex and it's technical. Yeah. In the US, we've got this thing called Life Path Paycheck, which is an education process leading into retirement age.
All right.
And so it's part of the asset allocation. So you're actually well trained to understand what it's about before you get to the point of retirement. And then you can have a pretty seamless transition from that accumulation phase to decumulation. So that's the nirvana. That's what we're trying to sort of solve for. And, I think there's good organisations in Australia now that are doing that in the retirement space as well. And if we can contribute to the fabric of it, that's the aim.
So, Jason, a key part to this podcast is to ignore the wild gesticulation from behind the scenes there that tells us we're at time, because there's just one more topic I'd really like for you to run through, and that is your thoughts on private markets. So I know that earlier this year you've participated in an ASIC public-private market symposium, brought together a number of players in this space, and BlackRock has an incredible amount to offer in the conversation. Where do you think it's going?
I think it was a really important body of work that ASIC did. The discussion paper is an incredible read. In some ways, what's happening in Australia mirrors what's happening globally. Public markets, the number of companies listed is decreasing. The amount of capital raised in IPOs in Australia is not keeping the momentum of previous years. And public markets are such a great democratizing force.
Yes.
You can't access private markets today in the way that you can access public markets. Hopefully one day you can. So it's a really important body of work. BlackRock has a really large private markets business now. Over the last 18 months, we've acquired a couple of businesses globally. One of them is Global Infrastructure Partners. Another one is HBS, a big private credit business. Preqin, a data business, which is related to private markets. And Global Infrastructure Partners and HBS in particular are quite meaningful investors into Australia in infrastructure and private credit. More than half of our investment team now, people will be surprised to know this, in Australia is either infrastructure or private debt or private equity in real estate. So
that's a change, isn't it?
It is. And I think the main focus of ASIC has been around the suitability of product to retail investors.
Yes.
So that's a consideration. But understanding the dynamics is so important to policy, to crowdsource capital. And, it's not a matter of private or public. It's a matter of elevating both because of this thing we spoke about before, the mismatch between the demand for capital and traditional sources. So a really timely body of work, really pleased that we could participate. And we are also working on the policy side, replying to discussion papers, making submissions to Treasury and the like.
Yeah, we had long conversations with ASIC over that body of work as well. It's so good to see the regulator get in front of what we know to be a growing retail attraction to a product that needs some good regulation around it. And good piece of work. Well, we have had a flyby tour of all of the topics that are hot in super at the moment, and there are many more. For any other hot topics, this is your podcast. This is the space to be. So thanks for listening. Thanks for joining us today, Jason. And this is ASFA, Voice of Super. If you would like to subscribe, you can get all of those episodes delivered to you in some meaningful way. Thanks very much. See you next time.